So let us have a look at now question number 7, one of the important question from this chapter, very frequently tested in the examination, which is about write about audit of drawing power of advances. So we need to understand something called drawing power now. So we will try to understand first what is this drawing power, then we talk about how to do the audit of drawing power. So this term drawing power, often referred as DP, mostly refers to short-term loans. And instead of saying short-term loans, I can say drawing power is a term associated mainly with working capital loans. When I say working capital loans, what do I mean by this is mainly overdraft loans or cash credit loans. So what exactly is this drawing power, sir? See, to understand what is this drawing power, we need to understand the loans from a practical perspective. So let us try to do it. Let us try to understand how the loans operate from a practical perspective. See, OD loans, cash credit loans, these are one of the most important sources of finance for businesses. We call them as working capital loans. Why? Because they are required for functioning of the company. They are required for working capital needs of the company. So assume that there is some company X Limited. They went to the banker and told, sir, please give me an overdraft facility. When I say overdraft, it is a short-term loan. It involves periodic repayments. So I went to the bank and told, sir, I want a OD or CC from you. I want 10 crores worth of overdraft facility. I want to take a short-term loan of 10 crore rupees from you. Now, as I was always saying, the banker will never give you the loan looking at your face. The banker will ask you security. Even when you go to the bank and ask for OD facility or cash credit facility, then also banker will ask you to offer some security. And the assets which are mainly accepted as security for this kind of working capital loans is current assets. Whatever current assets the company will have, those current assets are the main asset which will be accepted as security for the purpose of overdraft loans or cash credit loans or any kind of working capital loan. If you want from the bank, the banker will ask you to give your current assets as a security. In the current assets also, one of the main asset against which the CC overdraft facility will be given is stock, inventory. So one of the main asset against which the banker will give you working capital loan like OD facility or cash credit facility, on what basis he will give the loan? He will ask some security for you. And what is the most common kind of security which the banker will accept? Inventory, mainly inventory. So assume that you approached the bank on 1st of January 2023. You went to the bank and told, sir, I need a overdraft loan. What the banker will ask you is, okay boss, if you want us to give the overdraft loan, please bring the stock statement. What the banker will ask you? He will ask you to bring stock statement. Sir, what is stock statement? Nothing but as on 1st of January, how much value of total stock you are having, how much quantity of stock you are having, what is the value of the stock, that you will prepare one table that we call it as stock statement. So you went to the bank along with your stock statement. As per the stock statement, the value of the stock is 12 crore rupees. What is the value of the stock? 12 crore rupees. So I went to the bank, I took the stock statement along with me. As per my stock statement, the value of the stock is 12 crore rupees. I went to the bank manager and gave that stock statement. See sir, I have a stock worth 12 crore rupees. Please give me the loan. Now the banker, he will be very happy, but banker never ever he will give you the full loan. If you went to the banker and told, sir, I have 12 crores worth of stock, please give me 12 crores worth of loan. No, banker will not do it. Banker will always keep some margin. He will always try to give you the loan which is less than the value of the security. That is for sure. So if you offered 12 crore rupees of loan, he will say, okay, sir, I will sanction you 10 crores worth of loan. What he is telling? Sanctioning. So this we call it as sanction limit. The banker told, you are telling you have a stock worth 12 crore rupees. I will sanction you a working capital loan of 10 crore rupees. That we call it as sanction limit. Now there is one more twist here. The banker will say, I will sanction you 10 crores worth of loan, but he will not let me use entire 10 crores worth of loan. He has sanctioned me 10 crores worth of loan, but he will never let me withdraw entire 10 crore rupees. Now he will put one more limit, which will be generally lower than the sanction limit. He sanctioned 10 crores. but he will never let me use 10 crore rupees. He will say, I will sanction you 10 crores worth of loan, but you can maximum withdraw 8 crore rupees only. The maximum amount which you can withdraw from the loan is 8 crore rupees only. The maximum amount which the customer can withdraw from the working capital loans like cash credit or overdraft facility, that we call it as drawing power. That we call it as what? Drawing power. So understood, guys? First, you will go to the bank, submit a stock statement. On the basis of stock statement, banker will sanction you certain amount of loan, but he will not let you withdraw the entire sanction limit. Generally lower than the sanction limit, he will keep one more limit, one more limit regarding how much maximum amount which you can withdraw from that loan. In our example, 8 crores of limit, he told I can only withdraw 8 crore rupees of loan. That we generally call it as drawing power. So this all happened on 1st of January. On 1st of January, you went to the bank, submitted stock statement, he sanctioned your loan of 10 crore rupees, he gave you a drawing power of 8 crore rupees. But if you pay attention carefully, what is the asset which I have offered as security? Stock. When I give stock as a security, do you think I will take all my stock and place it with the banker? Will I carry all my stock? Will I bring a lorry and will I bring a truck, load all my stock and go and keep it with the banker? In the branch, I will keep it. No. So just now, as we have seen in the previous question, when you are giving stock as a security, that will fall under hypothecation. We give stock as a security, but that doesn't mean I will take all my stock and go and place it with the banker. No, stock will be still in my possession. So what is happening here? Hypothecation is happening here. So I hypothecated my stock with the bank and got a drawing power of 8 crore rupees. Now I will start using the loan. But the asset which you offered is a stock. Stock is something which is very dynamic. Stock will not remain constant. See, if you give building as a security, building will remain constant. If you give land as a security, land will remain constant. But if I give stock as a security, stock is not something which will remain constant. Stock is not static. It is dynamic. It will keep on changing. If the production is more than sales, stock will increase. If the sales are more than production, stock will decrease. See, if the banker has given you loan only on the basis of stock, and if the stock is not remaining in a and if the stock is not remaining constant, don't you think the banker will always be interested to know about the status of the stock? Yes, banker wants to know what is the status of the stock on periodical intervals. He can't just like that give and ignore. He has given you loan worth of 8 crore rupees and he can't relax it now. Why? Because the stock is not something which will remain constant. It will keep on changing. So banker will always be interested to know the status of the stock at any point of time. Sir, how the banker will come to know about the status of the stock? So generally, when the banks give the working capital loans, they will ask the borrower to submit periodical stock statements. To submit what? Periodical stock statements. Sir, what is that periodicity? Generally, the RBI says the bankers can accept stock statements once in maximum of 3 years. The bankers should get the stock statements from the borrowers for every 3 years. If the banker wants to get the stock statement for, sorry, not 3 years, guys, my mistake, 3 months, sorry. So RBI has told the banker should get the stock statement from the borrower at least once in every 3 months. They have to get the stock statement. See, if the banker wants to get the stock statement once in every month, okay, it is fine. Some banks will say we want the stock statement every 15 days. Fine, no problem. Some banks will say, sir, we want stock statements every 2 months. No problem. Most of the banks will say we want stock statements once in every 3 months. RBI told the banker cannot accept the stock statement which is older than 3 months. Now, some bank can't come and say, sir, if you submit me stock statement once in 6 months, that will be enough. Can the bank say it? No. RBI told the banks which are giving working capital loans to compulsorily get the stock statement at least once in every 3 months. If you are getting the stock statements for lesser duration, fine. RBI doesn't have any issue. But RBI tells no bank should accept any stock statement which is later than 3 months. That means compulsorily at least once in every 3 months, the banker should get the stock statement. Okay, this quarter will get over. Now, on 1st of April 2023, this person, the banker, told you please submit the stock statement once in every 3 months. Now, the banker submitted on 1/4/2023 once again a stock statement. As on 1/4/2023, the status of the stock, as per the stock statement, the value of the stock has fallen. Now the value of the stock has become only 10 crore rupees. At the time when he has taken the loan, what is the value of the stock? 12 crore rupees. But now quarterly, when he has submitted the periodical stock statement, the value of the stock has fallen. Now the value of the stock is only 10 crore rupees. Now the banker will say, boss, your stock value has reduced. No, we will reduce your drawing power also. Your stock value reduced? No. Initially, when you gave the loan, there is a 12 crores worth of stock. That's why we gave you 8 crores of drawing power. Now, the value of the stock which you are holding has reduced. What the banker will say is, we will not give you drawing power of 8 crores. We will reduce your drawing power by 1 crore. Going forward, you will have drawing power of only 7 crore rupees. Going forward, you will have drawing power of only 7 crore rupees. So now on the basis of this stock statement, whatever has been submitted, what the banker will do periodically, they will revise the drawing power also. Periodically, they will revise what? Drawing power also. Now for this quarter, the drawing power has been set as 7 crore rupees. Maximum you can withdraw 7 crore rupees only for this quarter. Now once again, the next quarter has come. 1/7/2023, the next quarter has come. Now in this quarter, once again, borrower will submit a stock statement. Now when he submitted the stock statement to the SBI, now the value of the stock is, once again, it has increased to 12 crore rupees. Now what the banker will do? Okay, since your stock value has increased, going forward, we will also increase your drawing power. We will make your drawing power to 8 crore rupees. So like this, the banker, on the basis of periodical stock statements, he will revise the drawing power on the basis of status of the value of the stock. Able to understand, everybody? But here most of the people will have one question. Most of the students will have one question. What is the question which they have is, sir, on 1st of January, you have already got a loan. They gave you 8 crores worth of drawing power. Now you are telling subsequently the drawing power will be reduced to 7 crores. Sir, anyhow, the borrower has taken 8 crores worth of loan, no? How they can reduce it to 7 crores now? This is the one common doubt which will be there in the minds of most of the students. You are telling on 1st of January only he took the loan. How much loan he has taken? 8 crore rupees of OD facility he has taken. Sir, if he has already utilized all that 8 crore rupees of loan, what is the purpose of reducing the drawing power once again, sir? This doubt you will get now. See, in order to solve this doubt, you need to understand the payment mechanism in case of working capital loans. Sir, what will be the payment mechanism for OD or CC? That we need to understand. Do you know credit card settlements? How the credit card settlements will happen? See, credit card settlement is not a credit card is not a long-term loan facility. It is a short-term loan facility. Assume that the banker has given you credit card. Okay. He has given a limit of 2 lakh rupees. You can maximum draw 2 lakh rupees. In the month of January, you utilized 1.4 lakhs worth of credit card. You swiped 1.4 lakh rupees of amount. Now bill will get generated. What you are supposed to do? Assume that the bill is generated on by the end of January, 31st of January, the bill is generated. Assume that 10th of the month is a date. On 10th of February, you have to pay this 1.4 lakh. You have to pay this 1.4 lakhs, whatever amount you have utilized, that you will pay it on 10th of February. If you repay that 1.4 lakh rupees, the bank will once again set your limit to 2 lakh rupees. Yes or no? Next, February came. In the February month also, you have a limit of 2 lakh rupees. You have withdrawn, you have used the card up to 1.8 lakh rupees of swiping you have done. Now this 1.8 lakh rupees, you have to pay it on 10th of March. If you pay it on 10th of March, once again your limit will be set to 2 lakh rupees. So like this, every time you make the payment, they will reset the limit. You can once again use that much amount in the next month. Assume that in the third month, what actually happened is, in the month of March also, you have spent some 90,000 rupees in your card. You made the payment on 10th of April and now the banker has to reset the limit. But before they reset the limit, banker came to know that you got laid off or you got a salary reduction. Your salary was reduced. You have lost your job or something happened. Now what the banker will do now? The moment banker came to know that your income has fallen, once you make this payment of 90,000 rupees on 10th of April, they will reset the limit. No, now they will not reset the limit to 2 lakh rupees. What they will do, they will reset the limit to 1.5 lakhs only. The banker came to know that your income has fallen. You have lost your source of income. If the banker comes to know about it, what they will do is, once you make the payment, next time when they are resetting the limit, they will not reset it to 2 lakh rupees, they will reset it to only 1.5 lakh rupees. That means going forward, you can only use 1.5 lakhs. You can only use how much? 1.5 lakh rupees. The same payment mechanism happens even in the case of OD or cash credit facility also. Sir, how this will be decided? How OD or cash credit payment will happen? Assume that in the month of January, you have got a OD facility to swipe up to use the loan up to 8 crore rupees. You have got a limit of 8 crore rupees in the OD loan, OD account. In the month of January, you used some 7 crores worth of OD. On some due date, you will make the payment. There will be some payment due date will be there every month. On that date, you will make that payment of 7 crore rupees. Then once you make that payment, the banker will reset the limit once again to 8 crore rupees. In the month of February also, you have used some amount of OD, you will repay it. In the month of March, once again they will reset your limit of 8 crore. Now in the month of April, when you submitted the stock statement, they came to know that your stock value has fallen. At that point of time, what they will do, when you make the payment, they have to reset the limit. No, they will not reset it to 8 crore rupees, they will now reset it to 7 crore rupees only. That means going forward, you can use only 7 crore rupees. So whatever payment mechanism that happens for credit cards, the same payment mechanism will happen even in the case of OD or cash credit facility also. Able to understand everybody? So this is how the drawing powers will be calculated. Sir, how the banks will determine drawing power, sir? Sir, if I am having 10 crores worth of debtors, 15 crores worth of stock, if I am having so many assets, I want to give all these current assets as a security for the bank for the purpose of loan. Sir, on the basis of my assets, how they will determine the drawing power? That depends on banks' policies. Some banks will say they will give 70% of the assets as drawing power. Some banks will say they will give 80% of the assets as drawing power. Some banks will say they will give 40% of the debtors as drawing power, 60% of the stock as drawing power. So to make you understand how the drawing power will be calculated, I have one illustration. I have one exam question. This is actually the exam question. So in this question, we will try to see how the drawing power will be calculated. First, let us try to understand the question, what they are trying to say here. Compute the drawing power for cash credit account of S Limited for the month of March 2022 with following information. They have a stock worth 50,000. They have debtors, including debtors of 5,000 rupees for an invoice dated 17/11/2021 for 45,000. Sundry creditors, they have for 15,000. Sanctioned limit is 45,000. See, one question you always have to remember, one thing you have to always remember, drawing power can never go beyond sanction limit. Drawing power can never go beyond sanction limit. Drawing power should always be within the sanction limit. Drawing power can't go beyond the sanction limit. If the bank has sanctioned you 10 crore rupees, can they give a drawing power of more than 10 crores? Never ever. The drawing power should always be within the sanction limit. Drawing power can't go beyond the sanction limit. So whatever it is, we have some details here. So they have given what is the value of the stock. They have given what is the value of the debtors. They have given sundry creditors. They have given sanction limit. They are telling that margin on stock is 20% and margin on debtors is 50%. And one more thing they are telling in the note point here, debtors older than 3 months are ineligible for calculation of DP. This policy also every bank will follow. They will consider debtors, but they will not consider the debtors which are outstanding, which are older than 3 months. That debtors they will not consider for calculation of drawing power. Sir, how to calculate the drawing power? For that, I will tell you a format. First, you have to take the stock. First, you have to take stock. Listen, guys, how to calculate the drawing power that I am telling. So first, you have to take the stock. From that, you have to reduce creditors. From that, you have to reduce creditors. The resulting figure which you got, that will be called as paid stock. So you will get that figure. From that, you have to reduce margin. From that, you have to reduce margin at the rate of certain percentage. Sir, what will be that percentage, sir? That percentage will be depending on different banks. Some banks will say 20% margin. Some banks will say 30% margin. Some banks will say 70% margin. So whatever it is, every bank will have one margin percentage. That margin percentage, you have to reduce it. On this figure, you have to multiply the given percentage. So that figure, you have to reduce it. Whatever figure you get, that becomes drawing power for stock. That becomes what? Drawing power for stock. Then you have to take the debtors. From that debtors, reduce the debtors older than 3 months. Whatever debtors are there which are older than 3 months, that you have to reduce. Now you will get some figure. From this figure, you have to reduce margin. In the question only they will say what is the percentage of margin. That margin you have to reduce. Margin at the rate of certain percentage. They will mention it in the question that if you reduce it, you will get some resulting figure. That we call it as drawing power for stock. Sorry, drawing power for debtors. Now what is the total drawing power? If you add this and this, total drawing power will be 1 plus 2. That will be the total drawing power. So this format you have to remember. This is the format on the basis of which drawing power will be calculated. Let me move it aside. So this is the format for actually calculation of drawing power. So depending on this format if you fill it, automatically you will get what will be the drawing power. So now we have all the facts in the given question. If you fill this table, you will automatically get to know in the given question what will be the drawing power. Shall we start solving it? Let us do. First, what they are telling, stock amount. How much is the stock amount? 50,000. Very good. 50,000 I will write. Then what is the creditors balance? Sundry creditors are 15,000. So let me reduce that 15,000. Whatever balancing figure you get, that will be 35,000. That is the paid stock. From this I have to reduce margin. What is the margin on stock? They say margin on stock is 20%. What is margin on stock? 20%. Which means in this figure I have to calculate 20%. If I calculate that 20% on this figure, it will be 7,000 rupees. How 7,000? 35,000 rupees into 20%. If you reduce this, whatever figure you get, how much will be the figure? 28,000. This 28,000 is drawing power for stock. On the basis of stock, this is your drawing power. Similarly, debtors information is also given. What is the total debtors? 45,000. Okay, total debtors are 45,000. Now they say that one of the debtor is relating to invoice of 5,000 and the invoice was given in 17/11/2021. Whereas we are calculating the drawing power for March 2022. That means the debtor for this 5,000 rupees is older than 3 months. Invoice is dated on 17th of November. We are calculating drawing power on March 2022. So this debtor is overdue for 3 months, or this debtor is older for 3 months. This 5,000 we have to reduce. Out of total debtors of 45,000, 5,000 worth of debtors which are older than 3 months, we will eliminate it. Now you will get 40,000. From this, you have to reduce margin. What is the margin given in the question? Margin on debtors is 50%. If I reduce at the rate of 50% margin on 50% means 20,000. So you will get balance 20,000. So this is a drawing power for debtors. What is the total drawing power? The total drawing power will be 28,000 plus 20,000. It will be 48,000. But here there is one main important point which you have to pay attention. By doing calculation, we got drawing power as 48,000. But in the question they have told sanction limit is only how much? 45,000. Sanction limit is 45,000. But if you do the calculation, you got the drawing power as 48,000. Can the drawing power go beyond the sanction limit? That cannot happen. Drawing power should never go beyond sanction limit. So in the given case, even though by doing our calculation, we got the drawing power as 48,000. But still sanction limit is only 45,000. So in the given case, drawing power also will be 45,000. In any case, drawing power can't go beyond the sanction limit. Okay, you have done all the calculation. By that you got to know 48,000 is a drawing power. But in the given case, sanction limit is only 45,000. Drawing power can't go beyond that sanction limit. So that's why in the given case, the drawing power also will be 45,000 only. So that's what even you will be able to find it in the answer. Clear? So just if you want to copy this format, please copy it. I will wait for a while. If you want to copy this format, please copy it. Anyhow, you have it in the material. But still, if you want to have a quick look, if you try to write it on your own, then you will remember it. You will not forget it. I will wait for a few minutes. Just try to reproduce this table, this computation chart on your own. I explained you at once, no? But you try to write it once on your own without saying, so that you will be able to remember it for a longer period of time. Okay, so I'll wait for a minute. Please do it. Now let us read the answer from the material. So since we are done with the calculation part also, whatever I have explained and few more additional things, we will try to get it in the material. So let us try to read it. So there the question is about how to conduct audit of drawing power of advances. I explained you what is drawing power. Now we will try to look into how to conduct audit, what aspects we will try to verify. So meaning, what is the meaning of drawing power? Drawing power, generally addressed as DP, is an important concept for cash credit facility availed from banks and financial institutions. Drawing power is a limit up to which a firm or company can withdraw from the working capital limit sanctioned. So whatever total working capital limit that the bank has sanctioned you, out of that maximum how much amount of money you can withdraw or use, that we call it as drawing power. Drawing power is different from sanctioned limit. The sanction limit is total exposure that a bank can take on a particular client for facilities like cash credit, overdraft, export packing credit, non-funded exposures, etc. So what they're trying to convey is sanction limit is different, drawing power is different. Now, when it comes to drawing power, what are bank's duties? What bank is supposed to do regarding drawing power? Let us see what are the bank and bank management's duties. All accounts should always be kept within both the drawing power as well as sanction limit. Quite common point. So whatever loans you are giving, all that loans and advances should always be within the drawing power and also within the sanction limit. No account should go beyond the drawing power and sanction limit. The account which exceeds the sanction limit or drawing power or are otherwise irregular should be brought to the notice of the management or head office regularly. If at all, if you find, generally it will not happen. But if you find any account where the actual utilized amount is higher than the drawing power or sanction limit, you have to bring it to the notice of head office regularly. Banks should ensure that drawings in the working capital account are covered by adequacy of current assets. Nothing but how do you determine drawing power here? Just randomly you will calculate? No. Drawing power we will decide on the basis of status of the current assets. So if the value of the current assets is increasing, banker will increase drawing power. If the value of the current assets is decreasing, especially stock, the banker will decrease the drawing power. So drawing power should be calculated with reference to the value of assets, especially current assets. Drawing power is required to be arrived on the basis of current stock statement. And that too, you should calculate the drawing power on the basis of recent stock statements, not the old stock statements. That is what the meaning of current stock statement. However, considering the difficulties of large borrowers, stock statements relied upon by the banks for determining drawing power should not be older than 3 months. That is what I try to put it in other way around. The stock statements should not be older than 3 months, which means every bank must try to get at least stock statements once in every 3 months. If the bankers want to get the stock statements with lower frequency, fine. RBI doesn't have any issue. If some bank is saying, I want stock statement every month, good. If some bank is saying, I want stock statement every 2 months, good. If the bank is saying, we want stock statement once in every 3 months, that is also fine. But no bank can come and say, I want stock statement only once in 4 months. Can they say it? No. So RBI has clearly told the banks should arrange to get the stock statement at least once in every 3 months. If you want to get it for lower frequency, fine, no problem. But don't give extra frequency for submitting the stock statement. It needs to be ensured that drawing power is calculated as per the guidelines formulated by board of directors of the respective bank. So every bank's board of directors will have different policies. Like I told, some banks will say 20% margin. Some banks board of directors will say 30% margin. Generally, private banks will have very less margin. So like this, every bank will have their own, every bank's board of directors, they will have their own policies for calculating drawing power. So the bank managers, respective low-level employees should make sure that whatever drawing power they are calculating, that should be calculated as per the policies of the bank. And special consideration should be given to proper reporting of sundry creditors for the purpose of calculating drawing power. See, sometimes what people do, what some borrowers will do is, in order to get more drawing power, they try to report less amount of creditors. Why? Because if you report less amount of creditors, what will happen is you will have more amount for drawing power. So some kind of borrowers will try to play this cheap tricks. So special attention should be paid to know whether sundry creditors are reported correctly or not. They should not be underreported for calculating, for getting extra drawing power. Bank should make sure that sundry creditors are correctly reported. Next one. So these are all bank's duties. So what are the bank's duties? Let us do a quick recap what they have told regarding the bank's duties. Bank should make sure that all the accounts are within the drawing power and also within the sanction limit. If at all they find any account which exceeds the drawing power, they should be brought to the notice of the head office. And drawing power should be calculated on the basis of current assets, and that too it should be calculated on the basis of recent stock statement. And they should get the stock statement at least once in every 3 months, and the drawing power should be calculated as per the guidelines formulated by board of directors, and special consideration should be paid to make sure that sundry creditors are reported at correct amounts. So we have seen bank's duties. Now let us see what are auditors consideration. As an auditor, what you should check regarding what you should check regarding drawing power. Let us see. The stock statements, quarterly returns and other statements submitted by the borrower to the bank should be scrutinized in detail. So if you are conducting audit of SBI, SBI has given so many cash credit loans. You want to know whether drawing power is correctly calculated or not. So if you are auditor, how you will come to know whether drawing power is calculated properly or not? You have to verify. The customer will submit all the stock statements, no? Will submit annual returns, stock statements, whatever documents that he is submitting to the bank. All that documents are required to be verified by the auditor to know whether the drawing power is calculated properly or not. And the audited annual report submitted by the borrower should also be scrutinized. He will submit quarterly returns, quarterly stock statements that will be verified by the auditor. At the end of the year, this person, the borrower, will also send audited annual report that also will be verified by the auditor. And the monthly or quarterly stock statements and the audited accounts should be compared, and the reason for deviations, if any, should be ascertained. See, during the year, the borrower will submit quarterly stock statements. At the end of the year, he will submit annual financial statements. Now, as an auditor, you need to check whatever quarterly stock statements that he has submitted, whether they are matching with annual financial statements or not. If he finds something wrong, then he has to investigate that matter further. So as an auditor, these are your responsibilities. Very simple responsibilities for the auditor. Whatever documents which the borrower has submitted for the purpose of getting that loan, for the purpose of determining the drawing power, all that you have to verify. And at the end of the year, that person will also submit annual audited accounts. That also you get a copy. You check whether quarterly stock statements are matching with this annual accounts. If you find any deviation, report it to the management, or you try to investigate further whether drawing power has been calculated properly or some deviations are there. Next one. See, there is also a concept of stock audit. As I was telling you, as I was explaining, so the banker always want to know the status of the stock. How the banker will come to know the status of the stock? The borrower will submit periodical stock statements on the basis of which the banker will calculate the drawing power. Now, what is the guarantee this borrower is sending correct stock statements? What is the guarantee the banker is sending correct stock statements? Might be to cheat the banker, he might be showing excess value of the stock. Quite possible, no? See, by the end of the day, borrower needs a loan from the bank. No borrower wants to get his drawing power reduced. So sometimes some borrowers, what they might do is, they might submit fake stock statements. Actual stock is only 5 crore rupees. But he is submitting fake stock statement and saying that he is having a stock of 7 crore rupees and getting extra drawing power. This also could happen. No? So that's why what RBI has told us, okay, in case if you have given a working capital loan and if the funded exposure is more than 5 crores, if the funded exposure is more than 5 crore, that means if the borrower has utilized more than 5 crores worth of cash credit or overdraft facility. For example, the banker has given a drawing power of 8 crore rupees. The borrower has actually utilized 5 crore rupees or 6 crore rupees of amount he has already utilized. Here we say funded exposure is more than 5 crores. Funded exposure is 6 crores. The actual amount utilized by the borrower, not the limit given, the actual amount utilized by the borrower, that we call it as funded exposure. So if the funded exposure is more than 5 crores, RBI says that in those cases, just receiving the stock statement alone will not be enough. The banker has to even conduct stock audit also. What the banker also should also do stock audit. Stock audit means what? The banker should send some of their employees to go and check really that much amount of stock is there or not. That stock audit also should be conducted by the banker, not in all the cases. For small borrowers, they don't want to make this burden. RBI told stock audit will be required only when the funded exposure is more than 5 crore rupees. If the borrower has utilized more than 5 crores worth of short-term loan, then only the banker, in addition to getting periodic stock statement, the banker should also go and do stock audit also. In what cases, guys? When the funded exposure is more than 5 crores. What do you mean by funded exposure? Drawing power? No. Funded exposure is actual amount utilized. Take for example, to one borrower, the banker has given a drawing power of 7 crore rupees. But he utilized only 3 crore rupees. Will the stock audit be required? No. In this given case, funded exposure is 3 crore rupees only, which is less than 5 crore rupees. Here, submission of the stock statement alone will be enough. There is no requirement of stock audit. Understood? So that's what they try to mention here in the stock audit. The stock audit should be carried out by the bank for all accounts having funded exposure of more than 5 crores. Who will do stock audit? Banker, not auditor. The banker is required to do the stock audit. The bank manager will send some of their employees to go and check really that much amount of stock is there or not. So the banker is required to undertake stock audit in case if the funded exposure is more than 5 crore. What is funded exposure? Actual outstanding amount, not the drawing power. Next one. Auditors can also advise for stock audit in other cases if the situation warrants the same. Assume I am an auditor of SBI. There is one borrower who has actually utilized only 3 crore rupees only, but I have some suspicion. I have a doubt, might be this borrower is submitting fake stock statements. Then as an auditor, I can go and ask the bank, sir, do the stock audit for this client also. Now the bank will say, sir, funded exposure is less than 5 crores. No, but I will say, I have a doubt. I have a doubt on this borrower. Please go and do the stock audit for this person also. So if funded exposure is more than 5 crores, whether auditor says it, does not say it, when the funded exposure is more than 5 crores, compulsorily banker will do stock audit. But in other cases, if the auditor feels it necessary, he will ask the bank to go and do the stock audit even if the funded exposure is less than 5 crores. Next one. Member banks should obtain stock audit reports from lead bank in case of consortium advances. See, we have seen consortium advances in the previous class. Assume that SBI is a lead bank. Okay. Along with that, some other member banks are there. ICICI is one of the member bank. Then we have Axis Bank, which is one of the member bank. Now, these consortium of banks, they have given cash credit loan to one borrower. And funded exposure for this borrower is more than 5 crore. Now, stock audit is required. When I say stock audit is required, will each and every bank of the consortium will go and separately do the stock audit? Will SBI will go and do stock audit? Axis Bank and also will go and do stock audit? ICICI also will go and do stock audit? No. In case of consortium advances, only lead bank will do the stock audit. Who is the lead bank? SBI. SBI will go and do the stock audit, and that stock audit will be submitted to respective member banks. So in case of consortium advances, stock audit will not be carried out by all the banks. Stock audit will be carried out only by lead bank, and that stock audit report will be submitted to respective member banks. Next one. The report submitted by the stock auditors should be reviewed during the audit, and special focus should be given to the comments made by the stock auditors on valuation of security and calculation of drawing power. So as a statutory auditor, you should also go through that stock audit reports, check whether stock auditors are giving any negative comments, and also try to make sure that drawing power has been calculated properly. It does not contain any material misstatement. So those are your responsibilities as a external auditor. Understood. So with this we are done with even the question relating to drawing power. So what and all we have understood regarding drawing power? We understood what is the meaning. We understood that drawing power is different from sanction limit. We understood what are the bank's duties regarding drawing power. We also tried to understand what are auditors' consideration relating to drawing power. We understood when stock audit will be mandatory. Okay, see, they might not ask you complete question, but in the earlier attempts they have asked a part of the question. Like they will ask you only what are the bank's duties relating to drawing power, or they might ask you what are the auditor's responsibilities relating to drawing power. Sometimes they might ask you entire question, write about audit of drawing power, then you have to write the entire answer also. So depending on the question, you have to draft your answer. So we have one test your knowledge question. Let us see what is that. Examination question. In a bank, all accounts should be kept within the drawing power and also sanction limit. The accounts which exceeds the sanction limit or drawing power should be brought to the notice of the management regularly. Analyze the following points to be considered in the computation of drawing power. That means they are asking you to write what are bank's duties, what is auditor's concern, how the drawing power will be computed, stock audit. So that means they are expecting you to write the entire answer. You have to do it here. Clear? So this is what regarding drawing power.